Take a look at the latest headlines with me. IRS issues nationwide alert. Major tax season changes Americans need to know. You can see this coming out January 6, 2026. Filing season strains, health credits, and trade fights coming out January 7th, 2026. Tax refunds could be delayed in 2026 after major 2025 law changes. Lawmakers are warning. And what the 43-day shutdown means for tax season, the longest ever government shutdown, they're saying will be impacting the tax season. And will your 2026 tax refund change under new tax brackets as the IRS starts accepting 2025 returns January 22nd nationwide? I'm going to get you caught up on the latest as we're hearing that there are new alerts coming out from the IRS for your taxes. I'm going to let you know what it is they're warning of, what they're saying that you need to know before you file your taxes. So we're going to dive right in. And if you appreciate the updates, do me a favor, hit the like button, subscribe to stay up to date. It's totally free. Why not? And as you know, here on the channel, I cite all of the sources. So everything I'm going to be referencing is going to be hyperlinked down in the description below. So that way you can go ahead and read these articles for yourself. In addition to that, also wanted to mention there are new videos live on the Holy Bible KJV channel, Steve Ram, Monica Ram. You're able to hear now Genesis 1 through 19 in my voice, the same voice that brings you the news, also bringing you the King James Version of the Holy Bible. Every Thursday now, 3 o'clock is going to be the cadence. You're going to be able to get new chapters that we are going to release every week. And also, not sure if I've mentioned this before, but my wife and I are now going to be releasing opinion pieces on Focus Point News. Focus Point News, you can see this is the channel. A lot of people ask, Steve, what are your thoughts on this? Here on the Steve Ram channel, I typically like to just share the news, not get too opinionated. But if you're wondering what are some thoughts, if you want to reflect on things, check out that channel as well. But let's go ahead and take a look at the warning coming out from the IRS. And also, in addition to that, if you're looking for ways to save on maybe car insurance, home insurance, what are the best savings and checking plans that are available right now? I've got links down below. We're hearing that people are switching their insurances, some cases saving $400 unexpectedly. So you might want to check those out as well. But let's take a look at this so you can get caught up on the warnings that are coming out from the IRS about some of the issues we could be seeing coming up here in 2026. They are warning millions of Americans ahead of the tax season. And let me know, are you concerned? If so, put yes. If no, put no. But I'm going to get you caught up so you know exactly what is going on. Now, this article says the Internal Revenue Service is urging the public to take action now and start preparing for the 2026 tax filing season as new policy shifts, filing options, and other major changes go into effect. Tax planning is for everyone, the IRS noted. Planning ahead can help you file an accurate return and avoid delays that can slow your tax refund, said the agency. For many Americans, tax season feels like a once-a-year headache, but the IRS is stressing that this year is worth preparing for early, not just because of the upcoming April 15th deadline, but also because a mix of new tax laws and changes to how refunds are delivered will affect nearly every single filer. So this is the warning that is coming out. The agency kicked off its Get Ready campaign, urging taxpayers to visit the dedicated section of irs.gov for checklists, updates, and no-cost filing options well before the tax season begins. Set up direct deposit is one of the key ones that they mention here. They're saying get ready now. Now, let's take a look at some of the reasons why they are issuing out these warnings, saying, hey, you need to be ready for what's coming. This one coming out January 7th, filing season strains, health credits, and trade fights. What to watch in tax policy this year. TPC Howard Gleckman outlines several tax issues likely to dominate 2026, even without sweeping new legislation. Among them are whether a diminished IRS can manage a filing season expected to include more than 200 million individual and business returns, many reflecting retroactive provisions from last year's reconciliation law. He also flags uncertainty around the fate of the Affordable Care Act's expired enhanced premium tax credits, President Trump's proposed $2,000 tariff-funded rebates, and the Supreme Court pending review of the president's tariff authority, which we heard could come as early as today. We did not see the Supreme Court rule on the legality of Trump's tariffs. He notes that beyond partisan politics, bond market reactions to inflation, debt, and interest rate pressures could ultimately determine which tax cuts move forward. A bumpy road ahead for 2026 filing season. So here is the warnings that we're hearing are issued. TPC's Janet Holzblatt warns that taxpayers should brace for a difficult 2026 filing season, citing staffing losses, leadership turnover, funding constraints, and the lingering effects of last fall's government shutdown, which we're going to get into here in just a second. As of May, the IRS workforce was down about 25%, and nearly half of remaining staff were furloughed for more than a month during a critical preparation period. So what we experienced with that shutdown last year, we are now going to feel it during the tax season. While early guidance on new deductions for tips, overtime, and car loans is a positive sign, former IRS commissioners have cautioned that implementing the One Big Beautiful Bill could strain already thin resources. Holzblatt also raised concerns about unanswered calls, delays for paper filers, and longer waits for refunds tied to flagged returns. Indeed, the IRS urges taxpayers to prepare for 2026 filings. So they're saying prepare now for what could be coming. The IRS is encouraging taxpayers to take steps now to prepare for filing 2025 returns, highlighting online tools and recent law changes. In its January 6 release, the agency emphasized using IRS individual online accounts, switching to direct deposit as paper refund checks are phased out, and reviewing new deductions and credits enacted under the One Big Beautiful Bill. The guidance also reminds taxpayers about reporting digital asset transactions, including from gig work and payment apps, and valid Social Security numbers and ITINs when claiming some credits. Parents may also be eligible to open new Trump accounts for children under 18 with a $1,000 pilot contribution for qualifying births. So these are some of the things that they are saying are currently putting a strain on what you expect for taxes coming up here very soon. Now, in addition to that, let's take a look at this one right here. This came out a little while ago, and it says tax refunds could be delayed in 2026 after major 2025 law changes, lawmakers have warned. Synopsis: IRS warns of possible delays in 2026 tax refunds. New deductions for tips and overtime complicate filings. Staff cuts and high turnover leave the agency struggling. TIGTA flags potential $360 million in fraud. Paper returns may slow processing. Taxpayers should prepare early and review updated IRS guidelines. Filing season may test IRS capacity like never before. The 2026 tax season could be challenging for millions of Americans as lawmakers raise alarms about IRS staffing shortages and new deductions introduced under the Trump administration's One Big Beautiful Bill. 17 senators, led by Senator Elizabeth Warren, sent a letter to the IRS Commissioner Scott Bessent and Chief of Taxpayer Services Ken Corbin on December 21st, urging the agency to hire more employees. They expressed serious concern about the IRS's ability to handle the upcoming filing season efficiently. The legislation signed into law in July of 2025 introduced significant new tax deductions, particularly affecting tip earners and overtime workers. Experts warn that these changes, combined with the staffing reduction, could delay refunds for millions. So they're saying if you do not file, there could be, in a timely manner, you might not get your refunds back on time. The IRS has lost roughly 25% of its workforce this year following widespread federal job cuts that eliminate around 213,000 positions nationwide. Additionally, the agency has experienced high leadership turnover, with 7 individuals serving as acting commissioner in 2025 alone. The senators highlighted reports from the Treasury Inspector General for Tax Administration, which warned that fewer staff could hinder fraud detection, slow processing of tax returns, and limit taxpayer support via phone and in-person consultation. They urged the IRS to recruit at least 3,500 employees to handle increased workloads and ensure taxpayers can access timely support. So they are saying that right now they are concerned that they don't have enough people on staff, and with all the changes that are taking place, it could make things a little bit difficult for this filing season. And we had that government shutdown, which is another thing that is thrown into the mix that could cause issues. What the 43-day shutdown means for tax season. Key points covered in this article. The recent government shutdown has caused significant backlogs at the already understaffed IRS, leading to expected delays in processing tax returns, issuing refunds, and responding to taxpayer correspondence. Taxpayers should prepare for a slower 2026 tax season by filing electronically as early as possible, organizing all tax-related documents, and anticipating that refunds and guidance on new legislation like the One Big Beautiful Bill may take longer than usual. IRS services, including phone assistance and notice resolution, will be limited as staff work to clear weeks of unopened mail and thousands of unanswered calls, potentially causing confusion and administrative burdens for taxpayers. The longest federal government shutdown in history has ended after 43 days, and the IRS is now working to bring its operations back online. With tax season just around the corner, taxpayers are watching closely to understand how this will affect their refunds, planning, and routine IRS correspondence. Early indications suggest slower processing times across several parts of the agency. Background: the shutdown came at a time when the IRS was already operating with a much smaller workforce. Earlier this year, staffing dropped from more than 100,000 employees to roughly 75,000. When the shutdown began October 1st of 2025, the agency relied on a short-term funding plan to keep all staff working. But once that funding expired, about half of the remaining employees were furloughed. Many non-essential functions were paused during that period. As staff return, they are facing weeks of unopened mail and thousands of unanswered calls. Tax season typically begins towards the end of January. Under the current funding bill, the federal government is funded only through January 30th of 2026. As a result, the IRS may be preparing to open the filing season at the same time another potential shutdown deadline approaches. This only adds to the uncertainty ahead for taxpayers. So, what if we had another government shutdown when the continuing resolution bill comes to an end? That would be pretty devastating. Refunds may be delayed. So this is what it means for taxpayers. Number one, refunds may be delayed. Refunds were not issued during the shutdown. Mail continued to arrive, but processing was limited because nearly half of IRS employees were furloughed. The agency must continue working through this backlog while handling new returns. Refunds that require manual review will move the slowest. This includes amended returns and filings that trigger identity checks or credit reviews. Electronic filing will help, but even those refunds may take longer than usual. Processing will be slower. Many IRS processes require human review. During the shutdown, activities like identity verification, error resolution, amendment returns, and general correspondent reviews were paused. This created a massive backlog for staff. Now they must sort and review several weeks' worth of mail before they can get to the filings that arrived during tax season. IRS service will be limited. Phone assistance, walk-in help, appeals, appointments, and taxpayer advocate service meetings were paused or reduced. All of these services must be restarted and rescheduled. Many taxpayers have been waiting for information or resolution for more than a month. It will take time to work through that demand. As a reminder, even when taxpayers can't reach the IRS, penalties can be issued and interest may continue to accrue. Notice resolution will take longer. An IRS notice is a letter that the agency sends when it needs more information or believes something on the return needs attention. These notices continue to be sent during the shutdown, but most taxpayers' responses were not reviewed. As the filing season approaches, many of those responses may still be sitting unopened. The AICPA warned that automated systems can continue to generate new notices even when earlier responses have not been read. This can create confusion for businesses that already sent the information to the IRS that was requested. It also increases the administrative burden for accounting teams who must track several notices on the same issue and confirm whether the IRS has finally processed their response. Potential delays to filing season. The IRS has not said whether the filing season will be delayed. The 2013 shutdown lasted 16 days and pushed the start of tax season back by about 10 days. 2018-2019 lasted 35 days, required more than a year for the IRS to fully recover. The recent shutdown lasted longer than both of those previous shutdowns, and the agency has fewer employees today. A slower start to the season would not be surprising. Guidance on the One Big Beautiful Bill may arrive later than expected. Many businesses are waiting for more information on the One Big Beautiful Bill. Key questions remain about business deductions, workforce-related credits, and cost recovery rules for equipment and capital investment. The IRS was reviewing these issues before the shutdown, but much of that work was paused. Any delays in guidance may affect year-end planning and how businesses prepare returns for this filing season. So how can taxpayers prepare? Preparing early is the best way to avoid disruption. Filing returns as soon as possible gives businesses a better chance of moving ahead of the backlog. Electronic filing should be used whenever available because it avoids the slowest part of the IRS system. Paper returns will take longer to process this season. Businesses and individuals will want to begin organizing documentation now. This includes notices, payment records, and mailed responses. This will make follow-up easier if the IRS takes longer than usual to respond. If a refund or a credit is part of early year planning, it may be helpful to build in extra time. Businesses with more complex returns or several entities should talk with their tax advisors sooner rather than later. Starting early can prevent slowdowns and help manage deadlines. So what's next? The 2026 filing season is coming up fast, but many IRS processes may move more slowly than normal. The shutdown created backlogs at a time when the agency was already short-staffed. Taxpayers who plan ahead, file early, and stay organized will be in a better position to deal with any delays. For more information on tax planning this year, here are some contacts for you. But there you have it, you guys. We are hearing that there are some issues that they are anticipating due to some of the changes that have happened, due to the shutdown, due to being understaffed. There are several things that they are warning could cause some delays. And you can see this one coming out in the last 24 hours. What's going to be impacting your taxes this season? The synopsis: new tax brackets 2026. The IRS 2026 tax season is expected to be one of the most unusual years. The IRS will start accepting 2025 tax returns on January 26th. But new tax brackets and federal tax changes could reshape refunds. Many Americans may see different refund amounts or delays. New deductions, updated tax rules, and IRS system limits are all influencing how fast refunds arrive and how much taxpayers will receive. New tax brackets for 2026. The 2026 tax season is shaping up to be one of the most unusual in decades. The IRS will begin accepting 2025 federal income tax returns on January 26th of 2026. But millions of Americans could face delays, confusion, and widespread variances in refund amounts. That's because the sweeping One Big Beautiful Bill signed into law on July 4th of 2025 introduced major tax code changes affecting refunds, deductions, and filing behavior this year. At its core, the new law permanently extended lower income tax rates from the Tax Cuts and Jobs Act and temporarily expanded several key deductions. For many taxpayers, these changes could result in larger refunds or smaller tax bills compared with last year. However, the benefits are not going to be universal. Let me know your thoughts. Are you concerned about this upcoming tax season, yes or no? Are you excited about it? Let me know your thoughts. We're hearing that there could be some huge deductions in store for a lot of people. It says the IRS has warned that the volume of new deductions and older reporting systems could slow the processing, especially for paper returns. Lawmakers have also raised concerns about staffing shortages and whether the IRS has enough resources to handle the increased workload, which could lead to longer wait times for your refunds. Now, experts urge taxpayers to prepare early and avoid assumptions about how much money they will be getting back. Every taxpayer's refund will depend on their unique situation, said George Conboy, chairman of Brighton Securities. There's no single number that you can rely on. With new deductions for Social Security, tips, overtime, and state taxes, some taxpayers may see larger refunds, while others could owe taxes unexpectedly. New deductions and what they mean for refunds. The One Big Beautiful Bill Act changes many aspects of individual taxation for the 2025 tax year, which you will file in 2026. Some of the most significant provisions include expanded SALT, state and local tax deductions. You can see previously the federal tax law caps SALT deductions at $10,000 per taxpayer. Under the new law, the cap increases to $40,000 for many filers, with phase-outs for higher income earners. This expansion could boost itemized deductions for homeowners and for other taxpayers who pay significant state and local tax. No tax on tips and tip deductions. Workers who receive tips can now claim a federal income tax deduction of up to $25,000 for qualified tip income. This provision applies for the tax year 2025 through 2028 and phases out at higher income levels. Accurate reporting of tips is essential to claim these deductions properly. No tax on overtime deductions. The new law allows taxpayers to deduct up to $12,500 of qualified overtime pay from taxpayer income. Like the tip deduction, this benefit phases out above certain income thresholds, providing meaningful tax relief for workers who earn overtime. Senior deduction for older taxpayers. Taxpayers ages 65 and older can claim additional deductions of up to $6,000 for individuals, $12,000 for qualified couples. These deductions can significantly reduce taxable income and increase refunds, particularly for retirees relying on Social Security. These deductions directly affect taxable income, the figure used by the IRS to calculate how much taxes you owe. Lower taxable income typically translates to larger refunds or smaller tax liabilities, assuming withholdings and credits remain unchanged. Refund timing and IRS challenges this season. As we saw in those previous articles, the warning is they are low on staff, they were delayed from the shutdown, and there are a lot of changes that are happening right now. Now, things that you can do, take a look. Tips for taxpayers to avoid surprises. Given the complexity of the filing season, tax professionals recommend early preparation and informed decisions. Start filing early. Review your withholdings. Use updated guidance and seek professional help. So right now they are warning that there are a lot of changes. This is going to be a very unusual year for the tax season. As they said, 2025 has the One Big Beautiful Bill that passed that's going to be applied retroactively to your taxes this year. Also, they are saying they are short-staffed, and there have been a lot of changes, and we had also delays with that government shutdown and the potential for another government shutdown starting at the end of January. We will see. I will keep you up to date here on the channel, but a lot is happening right now with the U.S. economy, and as things begin to shift and change, I'll be sure to keep you up to date here on the channel. So that is the latest, you guys. Thank you so much for joining me. Hit the like button, subscribe, check out the other channels, and all of these articles are going to be linked in the description below. As more comes out on what we can expect for the tax season, I'll be sure to let you know right away. Thank you so much for joining me. Have a great evening. Take care. God bless. I'll catch you in the next one. This is Steve.